Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, we would be reviewing Nigeria's full year 2020 capital importation numbers, published last week Friday by the National Bureau of Statistics. Capital importation is grouped into one, foreign direct investment, which is an investment made by a firm or individual in one country into business interests located in another country. 2. Foreign portfolio investments, which is purchase of securities and other financial assets by investors from another country. 3. Other investments, mainly trade credit, loans, and currency deposits. A certificate of capital importation, known as CCI, is issued within 24 to 48 hours by a Nigerian bank when an inflow of foreign capital, either in the form of loan or equity or goods, comes into the country. The primary purpose of the CCI is to guarantee access to the official foreign exchange market for repatriation of capital and returns on investments in form of dividend, interest, and capital on divestments. The total value of capital importation into Nigeria stood at $9.7 billion in 2020, a 59.6% year-on-year decline compared to the $24 billion in 2019. A further breakdown shows that foreign portfolio investment sustained its lead in 2020, accounting for 53% versus 68.2% in 2019 of total capital importation. Total FPI came in at $5.1 billion in 2020, down 68.6% year-on-year from $16.4 billion in 2019 to the lowest level since 2016, when Nigeria had its last FX crisis. Beyond the impact of COVID-19, the CBN's capital control measures were also responsible for the low FPI recorded in 2020. Still on FPI, investment in money market instruments, largely treasury bills (OMO), accounted for 81% of total FPI. Moving on, other investments dipped 47.5% year-on-year in 2020 to $3.5 billion from $6.7 billion in 2019. Loans accounted for 73.4% of other investments, down 49.2% year-on-year to $2.6 billion in 2020. Loans are mostly advancement by a foreign parent company to subsidiaries or foreign investment in Nigeria companies in form of debt. However, foreign direct investment, which is more long-term in nature, increased 10.1% year-on-year in 2020 to $1 billion. Comparing to Ghana, with an economic size of $50 billion in 2020, compared to Nigeria, which is estimated about $250 billion in 2020, recorded $627 million FDI inflow in the first half of 2020 versus Nigeria with $362.8 million in a similar period. This speaks to Nigeria's inability to attract FDIs due to its unattractive business environment, despite the huge consumer market. By sector, investment in the banking sector topped with a proportion of 38.7% in 2020. This was followed by financing and investment in shares with 19.6% and 19.1% contribution respectively. An assessment of Nigeria's capital importation by the origin of country shows that UK topped, accounting for 38.6% or $3.7 billion of total capital importation. This was trailed by Netherlands 9.2%, South Africa 9%, and UAE 7.8%. By states, Lagos still ranked the highest in 2020 with a significant 85.8% of total capital importation, followed by FCT with 13.1%. This implies that Lagos and Abuja accounted for 98.9% of total capital importation in Nigeria. By banks, the top three banks, Standard Chartered 26.3%, Stanbic 22.4%, and Citibank 15.6%, all accounted for 68% of total capital importation. While the sharp decline in Nigeria's capital importation in 2020 on a year-on-year basis can be attributed to the COVID-19 pandemic. The CBN's measures to restrict FX flows also contributed to this. Nigeria needs to review its trade and FX policies to increase its FDI significantly to boost growth. FPI is also required to increase FX liquidity for the economy. The CBN's current move to increase OMO Treasury bills rate for 364-day instrument to 10.1% last week is in a bid to retain existing FPIs and attract new ones. While this may compensate the existing FPIs for any devaluation of the naira, new FPIs will require more clarity around the FX before investing in the country. Thank you for listening. Please join us same time next week for another exciting and insightful session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 07082463747. Stay blessed.